Steph, g'day. So by how much have prices fallen?
Good morning, Joe. Yes, property data firm CoreLogic says that nationally we've seen a 1.3% drop in property values. That is the third consecutive month we've seen that, and it means that the values have fallen by around 2% since the start of May. So across the board, nationally, the average is for combined house and apartment prices that will set you back just a shade over $747,000. Sydney fared the worst. So Sydney has suffered its worst falls in the space of 40 years, actually, falling by 2.2%. We've also seen drops in Melbourne and Hobart around 1.5% each. Also up in Brisbane, 0.8%, and over in Canberra, 1.1%. But we have seen slight increases in Darwin, Adelaide and Perth. They are only marginal. But what we do need to look at and reflect on is the fact that these falls come after these huge price increases that we saw throughout the pandemic. So capital city values went up by a staggering 28.6% during that time, and regional values up by 41%.
Wow. And what lies ahead?
So what analysts are predicting, CoreLogic says that we're likely to see a sharp and sudden downturn similar to what we experienced in the global financial crisis back in 2008. And that's when we saw property values tumble by 8.6% in the space of 11 months. People, though, do believe that we're going to see even worse falls than that. That's because we don't have that stimulus spending like we did in the GFC to try and prop up the economy. Instead, we're actually going rather the reverse, trying to curb inflation. So it means that we could be seeing price falls of between 10 to 20%. But as I mentioned, given those staggering rises during the pandemic, that means that even if we did see a value drop off of about 15%, we'd still only go back to the levels of around April last year. So we are now, of course, really watching carefully to see what happens on Tuesday when the Reserve Bank comes out with its decision on interest rates. Most analysts are predicting a 0.5% increase to the official cash rate, so that will raise it to 1.85%, and that is definitely likely to put the brakes on spending for houses and apartments.
And challenging times for renters?
Yeah, unfortunately, it's very difficult times for renters at the moment. We are seeing a 9.8% increase in rents in the past year alone. Typically, we've seen those values go up by around 3 to 4% per annum, but we've seen those increases at even 2.8% in the last quarter alone. So it's certainly really tough times for renters. Part of that is due to increased demand. We're seeing foreign workers, foreign students coming back into the country. Also, landlords, of course, passing on those increased interest rate borrowing costs onto renters as well. And unfortunately, that also all adds into this really low vacancy rate that we're seeing across the rental market. So there are only around 1% vacancy rate at the moment. So that's very difficult, and we'll obviously have to wait and see what happens with that Reserve Bank decision on Tuesday as whether or not that's going to make it even tougher for renters yet again.
Okay, Stephanie Ferrier there in Melbourne.